స్టార్ట్ అయిపోయిందా? విమల స్టార్ట్ అయిందా?
లేదు
ఏదో సౌండ్ వస్తుంది వెనకాల.
I think somebody is talking. President sir, please mute everyone.
म्यूट एवरीवन.
Yes sir, one.
हितेश, एक बार मीटिंग स्टार्ट हो गया तो पूरा म्यूट कर दो.
Mute and sir, we need to create YouTube link and send to Raghuram.
Sir, YouTube is already live, sir.
Okay, ask Raghuram is on the line. I mean, is there?
Yes sir, Raghuram is there.
Raghuram, please share in the mail groups.
इधर सबको म्यूट में डाल दो.
I think all are on mute, sir. There is no issue with that.
No. You control that, because in between some people may open this thing, so that time it will create a nuisance.
Right, sir.
नहीं, जनरली क्या होता है, स्पीकर सर या जो भी यहाँ से कंट्रोल कर रहे हैं, anybody joining in will have some sort of background noise. So whenever anybody is joining, we have to keep an eye and mute them immediately, sir.
मेरा नहीं हुआ अनम्यूट, उसके लिए मैं बोलूं, मेरा अनम्यूट नहीं हुआ.
नहीं, आप अपनी तरफ से एक बार करो.
नहीं, मेरे तरफ से करता हूँ, लेकिन एडमिन करे तो ठीक रहता है ना सबका.
वो राइट है.
Question answer we are having at the last session, na?
Yes sir, yes sir.
Or in between?
No, in the end, sir. You will not disturb in between.
Okay, fine.
It is stop screen sharing and spotlight the speaker.
Okay.
I think
fine.
I have already spotlighted the speaker, sir. If this is visible.
But since this is you are in screen sharing, normal screen is coming. Stop screen sharing.
Yeah, 1 minute.
Already banner has been displayed on the. Yeah, okay.
Minimize karo. That will be good. Yeah, now you spotlight speaker.
Is it okay?
It's okay, but spotlight speaker. Speaker, yourself. You can do any number of spotlights.
जनरल గా 15 రారా వస్తారా?
There, no voice is audible.
Host muted everybody. విమ్లో కొంచెం చూడు, హితేష్ కదా ప్రాబ్లం ఉన్నట్టు, నువ్వే స్పాట్ చేసేకూడదు.
Now is it okay?
It's okay, but your spotlight is not working.
No, it's not, sir. It's not.
And it's why we're not able to find out or
No, better we should not delay, sir, actually.
hmm. Shall we start then? 45 members still now. It's already 402. Or shall we wait for 2-3 minutes?
We'll just wait for some 5 minutes, sir.
Okay. Okay.
How many members are there?
Sir.
Forty-seven joined. Okay. This includes means basically chartered accountants and tax practitioners also, no?
Yes, sir. Yes, sir. Tax advocates, chartered accountants, both.
Okay. Ramdev sir is there or no? Hello. Hello. Yes. Yes.
So I think we should start now.
Yeah. Request everyone to mute themselves.
Yes, sir.
Yeah, that's good. Now Now you can go on adding any number. Hitesh, you also can spotlight. You come on to the
Yeah, yeah.
screen.
Vimla,
Yes, sir. Amrit sir.
yeah, somebody is no, వాడు దీంట్లో ఉన్నట్టున్నారు, ఏది మొబైల్లో ఉన్నట్టున్నారు, అందుకోసం బ్యాక్గ్రౌండ్ సౌండ్ వస్తున్నారు. నువ్వు మొబైల్స్ అని ఆఫ్ చేసి పెట్టమని వెన్ దే ఆర్ ల్యాప్టాప్స్ ఆన్ చేసి ఉంటే డెస్క్టాప్స్ కానీ ఒక చిన్న సూచన లాంటిది ఇవ్వండి. అండ్ వీ కెన్ స్టార్ట్. ఐ థింక్ ఇట్స్ ఆల్రెడీ 58 people are there in the board.
Yes, sir. Please start.
Yeah, request everyone to mute themselves, please.
And once it is started, Vemula and Hitesh, you go back from the screen.
Yeah. President sir, if you have an option of muting everyone, you do that, so that you can allow only when somebody is required to talk.
Sir, so I have muted that one sound which was coming. I have muted.
Okay. So, well, so shall we start?
Yeah, please.
Yeah. Very good afternoon to all dear colleagues who presented for this first speaker meet. This is C.A. Chandrasekhar Bemla, Secretary of AP and Telangana Tax Bar Association. Along with me, the President Hitesh is present, and along with us, we have GC members also present here, along with Competition Committee Chairman Amrut sir, and GC members present, Ramna Reddy Garu and Samamurthy Garu, CA Samamurthy Garu, and N. Someswar and Ajay Kumar ji. So these people I can see. So with DC, welcome you all the participants for this meeting. Dear professional colleagues, our term just started 15 days back, and in the recent GC, we thought this will be an ideal program where now every professional is trying to line up all their strengths in filing the returns and preparation of tax audits and all. So we thought it will be a very ideal program, and President tried Avinash ji, and is so kind enough in accepting to be the speaker over Zoom platform. So thank you so much for your kind gesture, and I'm sure with your knowledge, with your knowledge sharing, I'm sure all these participants are going to be benefited, and they'll be enriched in the knowledge of filing the returns and tax audits. So with this few words, I welcome you all to this virtual seminar, first speaker meet of our term. So we are really excited to go on. So thank you all. Now I request the President Hitesh to give his address.
Yes, sir. Thank you, Secretary sir. Hope I'm audible.
Yeah, you are audible.
So, welcome, Speaker sir, Avinash ji. I thank you again for giving us the opportunity to hear you, because this is the first program of this new GC committee, and you are the speaker. So I think we are going to have a very blasting year, because the beginning is very good. And apart from that, I welcome all the members, all the GC members who are available. We thank you all for joining in this program. I think this program is a current program, which is the requirement of the all the direct tax professionals, especially. Why? Because the IT returns and tax audit reports are being filed now. So we have to be careful. So we thought that whether let it be a webinar at least, but it should reach every member of your office, so that it should not be just a physical program being attended by few. Intention was to reach every member of the respective offices, so that, because they are the guys who actually file the returns. So intention has been to reach the last person available in the office, not just the members. So that is why this program is open for all also. It is not only for members. So with this limited words, I again thank all of you for joining. Going forward, we will be having more interactive programs, and I also request Rawani sir to we will invite you for a physical program as well. So I think you will be kind enough to give your record for that. So I also, regarding the future programs, there will be a moot court tribunal competition, which is our flagship program every year. So that also will be there. Apart from that, we are planning various types of programs with regard to litigations, etc. So let us restrict to today's program, and I hand over to Secretary, sir. Thank you.
Thank you very much, President sir. I'm sure the year is going to be blessed with good hand of Avinash ji first program. I'm sure it will happen, sir. The next part of agenda is introduction of speaker. So, being secretary, I take the privilege of introducing this great personality. Friends, is senior most member of the institute with 31 years long standing, practicing in the name of Rawani and Company since 1993 in the areas of direct tax audits and company law matters. Member of various study circles and study groups of Western India Region Council of ICAI. He has delivered more than 600 lectures on the topic income tax and company law. He's also visiting faculty for various corporate houses and Indian Institute of Management. He has plenty of achievements to his credit. He's the core team member of ICAI in handling e-filing help desk on issues on uploading, filing of various e-tax audit reports and e-IT returns mandated under the provisions of income tax. This is a very important task. He is special invitee member of the Direct Tax Committee of ICAI for the year 2018 and study group member of the committee since 2019. Presently, study group member of Direct Tax Committee of ICAI on preparation of implementation guide on changes in Form 3CD. Member of Company Law and Grievance Committee of ICAI for the year 22-23 and invitee member of Indirect Tax Committee of Western India Region Council for the year 22-23. Member of the Study Group of Corporate Law and Governance Committee of ICAI. Member of the Law and Representation Committee of Chamber of Tax Consultants. Invitee member of Committee on Commercial Laws, Economic Advisory and NPO Cooperative of ICAI for the year 24. The list goes on, my dear friends. The list is now not ending. He has contributed to many publications and books as author and co-author and also team member. I'll just refer few of his contributions to the publications. Technical Guide on ITR Forms published by Direct Tax Committee of ICAI in the year 2018. Guidance Note on Revised Tax Audit Reports notified in the year 2018. He's also part of team member and contributed to the Practitioner's Guide to Audit of Small Entities in the year 2019. And he contributed to the recent publication of Company and Law Governance Committee of ICAI to the book on Technical Guide on Easy Incorporation of Company and Technical Guide on Charges and Registration, Modification and Satisfaction under Companies Act 2013. He's also co-author of the book on Fringe Benefit Tax published in the year 2019 by Malad Chamber of Tax Consultants. My dear friends, the list is not ending. It go on. So that is the experience of the speaker. So with these few words, I introduce the speaker to the present gathering. Sir, welcome you for this virtual seminar. Avinash Rawani ji, CA Avinash Rawani ji. So welcome you, sir.
Thank you very much, Bimla ji, for kind introduction, and I'm most grateful to you for giving me this opportunity to speak on this platform again. I think I have spoken on this platform last, 3 to 4 years back when Ramdev Buddha ji was there.
Okay.
And this topic, I think I'm speaking on this topic again in this week for the 4th time.
So for all of us, first time, sir. I'm hearing first time, sir. So
yes. And,
sir, now the forum is the platform is with you. So now please start your session, sir. Hitesh, you can make only speaker as the spotlight, and you can remove both of us. request all the members to just patiently hear the session and any questions that you're having. So please reserve yourself to the question answer session. We have a question answer session will be handled by Samamurthy Garu. So please write your questions, put in the chat box. So we'll be handling, we'll try to answer all your questions. But in between, if speaker asks, you can come with the question. Otherwise, try to not interrupt the speaker. Let him continue his session.
No
So
problem.
please mute yourself.
Any questions there in between, if related to that topic, you can just definitely interrupt me. It will be grateful because I can take it up in between also, because this topic we can make it interactive also. And this topic basically we have divided into two parts. So first part I will take it 3CD parts, amendments, and second part will be ITR. So ITR I think is second part because modifications are much more in the ITR part. So coming per se about, always start with the disclaimer, because you know wow, the website, when you deal with the websites, and since 2006 I'm being dealing with the website, and what happens and what is being done on the website I don't know. So this basically, this talk, I always start with my note with the disclaimer that whatever is this is not a legal advice. It is just for the discussion purpose, and whatever is there on the website or whatever happens in the website is totally different, and it's not taken.
Sorry, sir. Sorry to interrupt you. Your voice,
My voice, I'm able to hear now. Is it proper?
I'm able to hear, but somebody is putting that your voice is low.
Okay. Okay. Now is it clear now? Is it fine? Now able to hear it?
For me, it is good. It is good. Yeah.
Okay, good. Okay. So this basically, this is not a legal, what the presentation is for the purpose of discussion only, and this presentation should not be used as a legal advice. And whatever is basically is requirement of your client, you should study the law. You should study the law properly, and this is only basically for it is to be taken just for the filing purposes. And because what the website, when you deal with any technical matter or when you deal with technology keeps on changing. So please do not take it as a legal advice, and neither this association, neither this income tax department, neither myself should be is binding for this discussion. Coming to the, first of all, always government announces that we have so much collection, tax collection source figures goes on increasing and all. The first and the foremost collection, this is because the 1,35,000, the collection rose by 7.40 lakhs individual tax collections, which was government had declared this year that collection has increased by 7.40%. And net direct tax collections total estimates exceeded the revised estimate by 13,000 crores. Now, basically, if you see, the government has given the refunds of exceeding 3.70 lakhs 9 crores. And if you see that this year, the website, when you file the returns, the refunds you get, immediately the refunds are coming. And once you file the refunds, you get it most probably within a day, so people are getting the refunds. Now, this is the way how the website's performance has increased. This is one of the biggest achievements in the last 2 years because of the changes in the websites. But you see, one core reasons why this income tax income tax collection has been increased. What it is stated that increase in the personal income tax is raised due to the dividend which has been made taxable. Because earlier what was there, the dividend distribution tax was there. So dividend distribution tax, basically dividend was taxable, nor was the tax was paid by the corporates, and it was tax free in the hands of the recipients. But now dividend is taxable in the hands of the recipients. So now they have to pay the tax. So this is one of the basic reasons why the tax collections income tax, personal tax has been increased. That is one of the reasons. Second, coming to the second part, over 8.18 crores returns as was filed last year. So this is the highest because the increase in the 9%. Every year, almost around, government has targeted that increase. So every year 9% returns filers are being increased. And government has started sending the SMS to every people, and every day you get some or other type of e-campaign messages, and people generally get bored up with the SMSs which is coming from a department. So when the discussion was going on, we told that basically when the returns are being filed, already the SSC has filed it, and please don't send the messages to them because we get fed up, because once any messages comes from the department, people are worried that something has gone wrong. So this is one of the basic reason, because when the returns are being filed and when the SMS comes, people get worried about it. So e-filing team handled almost around 227 lakhs point 37 complaints. So this digital payments system, because now you can pay the taxes also through credit cards, debit cards up to certain amount, it's up to 2 lakhs rupees you can pay it. So these all technical teams developments are there in the income tax departments. As you see, up to in 2014, almost around 4.14 crores returns filers were there, which has now crossed 8.18 crores. And this year target is that at almost around 10 crores returns filers will be there. This is what is the expectation of the government. And the total number of audit reports and the other forms which was filed last year was something around 1.60 crores. And as against 1.40 crores, 43 crores audit reports which were there in the year 22-23. So these almost audit reports filers are also increasing by 10%. So see the number of people who are filers is increasing on the web portal. Then coming to the changes in the tax audits reports, which is the topic of discussion today. So basically, there are 7 changes in the Form 3CD this year. The topic per se, the 7 clauses, which is the amendment is there. Some clauses have been added, some are modified. There is a changes in this. So coming to this, the Central Board CBDT notified these changes by notification number 27 of 2024 on 5th of March 2024, wherein these amendments were notified. And the aim was there to refine and update the tax audit procedures to align with the legislation, because there was an amendment in the Finance Act. And based on these amendments, the tax audit report required the amendments. So for this purpose, these 7 clauses were modified in the tax audit report. Now coming to this, step by step, we will discuss what are the amendments which is required and how the reporting has to be done by the tax auditor. First clause which is there, that is about that is Finance Act introduced 115 BA. Now we are all aware that from this financial year, that is in this new scheme of taxation has been made mandatory for all the assesses. So if a person who wants to opt for the old scheme has to file the form, but for the cooperative society, a new scheme was introduced in the Finance Act. Finance Act 2023 came up with a new scheme of taxation for cooperative societies. This is the goal to cooperative societies. Cooperative societies came up for manufacturing cooperative societies. From assessment year 24-25, this alternative scheme was also, they also were covered by the alternative scheme of taxation, wherein it says that if a cooperative society, if they want to opt for the alternative schemes, then they can also opt for the scheme, and for that purpose, they have to file form number 10 IFA, just like what individual has to file, that is form number 10 IC, etc. was there in the same way. So if the cooperative society has filed, wants to opt for this scheme, then they are required to file form 10 IFA. So suppose now any tax auditor, if he is doing the audit of the tax, they're doing the tax audit of such type of cooperative society, then if the cooperative society is covered for tax audit, then it is the duty of the tax auditor, he has to see that whether the such cooperative society is opted for such scheme or not. If the cooperative society has opted for such scheme, then the obligation is there on the tax auditor. He has to see that the cooperative society has complied with such filing of such forms or not. Because this filing of forms is mandatory. Without filing of such forms, on or before the due date, the society cannot fulfill this. This society cannot comply with these requirements. So the obligation on the tax auditor is limited to the reporting whether the SSA has opted for this. So in this case, if the society has opted or not, so while doing the tax audit, just like in other cases, we have to just inform whether the society has opted or not. If the society has opted, then the responsibility of the auditor increases. The auditor has to verify whether the society has filed this form or not. So if the society has not filed this form, the responsibility on the auditor will increase, because in this case, If the society has not filed the form before the due date of the filing of the form, then this new scheme, they cannot adopt this, go opt for this new scheme. So this has to be verified by the tax auditor. So this is the first change which is there in the tax audit. So auditor has to ensure that before signing the audit report, he has to see that this form has been filed and has to report accordingly. So this is the first change. Coming to second change.
Sir, sorry, Avinash sir, keep little closer, sir. Your system, you come little closer so that your voice will be good.
Okay, I'll just. Now, is it okay? Is it
Yeah.
clear?
Yeah. Good.
Okay. Now coming to the second change, that is clause number 12A. Clause number 12A is about the presumptive basis. Now, this clause was already there in the earlier form 3CD also. In that earlier clause, what it says that if you are preparing, if the SSC is preparing a profit and loss account, so in the profit and loss account, if there is any income which is taxable under the presumptive basis. So if any income is there under the presumptive basis, because presumptive basis, if any income is included, then that income is not to be considered in the profit and loss account. That has to be excluded in the computation of account. Right? This everybody is aware. So in that clause, what it stated that whether the profit and loss account includes any profits and gains from business on a presumptive basis, if yes, then it had given the clause, there is 44AD, 44AE, etc. These clauses were there. So this was there, but in that clause, 44ADA was not included. So this year, they have included 44ADA. So what earlier was there? People were, means the tax means the confusion was there whether the 44, if any audit which was done for the professionals, whether 44ADA was to be included or not. This was the biggest confusion which was there. But here it was covered. Basically, if you see that it was covered already, 44ADA was already covered in the other relevant section. When the income is already covered in this section is already included in the other relevant section, this was included, it was already covered under the silent section. So specifically the change has been made is 44ADA has been specifically added over here. The threshold limit, see earlier, now we see this. So what here the auditor has to see that in the profit and loss account, if any item which is there in the profit and loss, any income which is there, if it is taxable under the presumptive, it is already included, then that has to be excluded from that. So in this clause 12A, if any item is taxed on the presumptive basis, so that has to be reported in 12A. This income is already taxed on the presumptive basis, so that has to be reported in this clause. Now, if you see the threshold limit which is there for the total turnover, that is 44AD, has been increased to 3 crores. And in case of 44ADA, it has been increased to 75 lakhs rupees for the minimum. Otherwise, they will get required to get the audit. Now, but what it says that in case of that is individual HUF or LLP, what it says that for the limit of 2 crores to 3 crores, that is for the assessment year 2 crores, for the assessment 24-25, it says that if the turnover limit is between 2 crores to 3 crores, if a person who wants to opt out of that, who wants to, that basically who doesn't want to get his accounts to be audited, tax audited, then he has to ensure that his cash receipts or cash payment should be less than 5%, and he has to disclose his profits on a presumptive basis, that is 8% or 6%. 8% if he is having this cash deposit, 8% and 6% of the cash. 8%. Yes. So cash receipts or cash payment should be less than 8%, and he has to declare the profits on 8% in case of cash receipts of the cash turnover, 6% of the other than the cash turnover, then he will not be covered by the tax audit. This is the criteria which has been added. So in this case, it is specifically for individual, firm and HUF only, not for other SSs. So for other SSs, basically other than individual HUF and LLP, it will remain the same only. That is other than, that is they have to ensure that other criteria remains the
హలో
అయిపోయింది.
లక్ అయింది.
తీసుకొచ్చినారు తెచ్చినట్టున్నారు ఏంటి?
సార్ మేము మన ఎక్స్పోర్ట్ బిల్స్ అవన్నీ తెచ్చాను.
మీ వాళ్ళు మాకు ఎందుకని ఇవ్వట్లేదండి ఈ బిల్లులు? ఈ బిల్లులు ఇవ్వకపోతే ఈ బిల్లుల మీద మీరు ట్యాక్స్ కట్టామంటున్నారు, మాకేమో చెప్పట్లేదు. ఆ ట్యాక్స్ కట్టినట్టు మనం జిఎస్టీలో డిక్లేర్ చేయకపోతే నేను ఎట్లా సర్టిఫికేట్ ఇవ్వటాను?
हितेश जी एक बार फोन करो ना उनको. President जी.
Yes, sir. Yes, sir. I'm calling. Just 2 minutes.
యూట్యూబ్ లో లేదు వస్తున్నారు, టీవీలో యూట్యూబ్ లో పెట్టాం.
Some technical issue from their end.
Sorry for the interruption, dear friends. Just hold on.
He's joining back.
What happened, Hitesh?
He is again connecting, sir. I think there's some issue from his end in connecting that. I again called him, so he is connecting. Sorry for inconvenience, everyone. Just 5 minutes.
విమలా ఇది రికార్డ్ చేస్తున్నారా?
యూట్యూబ్ లో కూడా వస్తుంది కదా సార్
అదే
ఆటోమేటిక్.
అదే మనకి అంటే ఉంటే మన మెంబర్స్ కి మళ్ళీ ఇంకోసారి సర్క్యులేట్ చేయొచ్చు.
It is there, sir. It is getting recorded, no? Will be.
One minute, there's a power failure over there with the net connection. So we'll just keep it.
Okay, right. Sorry.
నమస్కారం అమృత గారు. సెక్రటరీ గారు నమస్కారం.
సార్ నమస్తే. శ్రీనివాసన్ సార్ నమస్తే.
కాళాసి శ్రీనివాస్ నమస్తే.
నమస్తే గురు. మా వెనకాలంతా ఇదిగో.
Sorry, there was a power failure.
Yeah. It is again, yeah. Welcome back, sir.
So basically for actually the power failure was there on the internet side. The power got failure. All this, when you deal with technical people, this all these problems.
Yeah, this is very common.
So professional. Basically, specified professional means basically we have a list of specified professionals, and specified professionals, the turnover, if it is less than 75 lakhs, then you have to go for a presumptive profits. It should be 50% of professional receipts. And if any person who is not disclosing 50% of the professional receipts, then they are liable for tax audits. They can get their accounts audited and gets the account audited. So basically, there is no this is the only the turnover limit has been increased from 50 lakhs to 75 lakhs. Then coming to another change, basically depreciation. So clause number 18 basically relates to those SSCs who are adopting the new scheme of taxation, basically the alternate scheme of taxation. So in any SSC who is adopting alternate scheme of taxation, so any changes which is required to be made in the written down value of the assets, because in this case the depreciation which has been claimed, that is additional depreciation, etc., is not allowable to them. So that has to be reversed in such cases. So if such claims are required to be made, which is not eligible, so that has to be reversed. So that working has to be done. So basically what happens that basically what has to be done, that auditor has to see that if the new schema is been opted by the SSA, then he has to see that when that written down value, any changes has to be made. Based on this, any changes has to be made in the written down value. Then whatever the changes has to be made based on this. So for that purpose, a subclause number 3 has been added. So which is exactly what is there on depreciation schedule in the ITR. So this has to be certified by the auditor. This has to be certified by the auditor in the auditor. So that written down value of the assets will be certified by the auditor. So what has to be said that in as per section 115 BS6, in case a person is having an income from business or profession, if the option has been exercised in the manner as may be prescribed in the assessment on or before the due date. So here also one thing is that for opting this scheme, the SSC has to the tax auditor has to ensure that the required form has been filed by on or before the due date if this is opting for the alternative scheme, or if it or the alternatives. Basically, specifically this will come for the SSC manufacturing cooperative societies, which will be opting for the alternative scheme which is available for this assessment year, and specifically those SSCs who will be opting for the new scheme in this assessment year. So they have to be very specific for this purpose. Coming to another clause, that is basically two new clauses has been clause number 19. There have been that is 35 ABA and any other relevant section. These two clauses has been added. Now here what it says that what amount has been debited in the profit and loss account, and whether that amount is debited to the profit and loss account, auditor is required to certify that whether that is allowable, and if it is allowable, whether it also fulfills the conditions under the Income Tax Act 1961 and rules, which is rules and the guidelines or the circulars which are issued in this behalf. So now what it says that it is both are the newly added section. So now this is the biggest and the important changes which is there in the income tax in this Form 3CD, and is a very, very big challenging position for the tax auditor. Now what this section 35 ABA says that section 35 ABA relates to the basically it was applicable from 2017-18 onwards, and it relates to the spectrum and telecommunication services related services. So, and it relates to basically amortization of the telecom licenses fees. And in this case, basically what happens that if any telecom license services or spectrum which is purchased, and in that case, suppose if any amount paid, so whether that amount is debited to the profit and loss account, and about if the amount is debited above which how much amount is liable to be claimed. So that has to be certified by the auditor. So this is one certificate which is required from the amount allowable has to be certified by the auditor. And another last, this second change which is there now, it says that about any relevant section. Now, any other relevant section is a big debatable thing, because any other relevant section means it requires that the tax auditor has to examine administratively every expenses which is debited to the account. Yes, any questions are there?
No, sir. Please go on, sir. No questions.
So basically now it says any other relevant section means now what auditor has to understand. See, one question comes, no? See, when you write any other relevant question section means it covers basically everything. That means basically if you any other relevant the auditor what has to do, he has to verify everything whether it is allowable or not. He is basically what an assessing officer, what has to be done. So this is becoming a very big challenge for an auditor, that he has to see whether what is, he is not an assessing officer, that he has to see what is allowable, what is disallowable. And if suppose tomorrow he is doing an audit of any concern, so if he writes anything, it will be a big challenge for to deal with the SSC also. So those clarification, specific clarification is not being given in this regard. So actually CBDT has to clarify regarding this, what actually CBDT wants under this clause. So there are specific limitations also for the tax auditor, that what he has to report. So in this case, what has to be done, that as per the institute's guidance note, what is there, which is available 2023, the help should be taken according to me, that in that case, para number 31.1 to para number 31.9 of the guidance note said that what has to be reported under this clause, because any other relevant section is a vast subject and vast topic. So based on the guidance note, whatever has to be covered, that's to be reported over here. And when the tax auditor certifies anything about this, so in the main report, you said that since specific reporting clarification except is available from the CBDT, our report is restricted to this point only, and we have not gone beyond this. So like we are, whatever disclaimer which we are giving it for the reports, so same way, in the same lines, the disclaimer should be given. That is actually my opinion. So that should be given over there. Then coming to 21A, again, there is a big change about this. There are 3 changes over here. Basically, clause number 21A6, it requires about the, earlier it required about to report about the penalty or fine which was paid for the time being in force. Now, specifically, it was a general clause which is reckoned. So any other expenditure by way of a penalty or fine for the violation of any law. Now here it says that enacted in India or outside India, the word has been added. So the auditor here is required to specifically report about any penalty which is debited in the profit and loss account for a fine for violation of any law which is enacted in India or outside India. So that is post-amendment reporting is required. Second is about clause number 7, subclause number 7. It says the expenditure of by way of any other penalty or fine which is not covered above. Earlier it says that, but now the clause has been changed, that expenditure incurred to compound of an offense under any law for the time being in force or in India or outside India. So basically now here it requires that any amount which is paid to compound an offense under any law. So if under any law, if any amount has been paid for compounding of an offense, because generally what happens when there is a violation of any law, and for violation of any law, any compounding fees has been paid for compounding an offense under any other law. If that such amount has been paid or if this amount is debited in the profit and loss account, that has to be reported under this. Then clause number 8, which was there, it says earlier it said that expenditure incurred for any purpose which is an offense or prohibited by the law. Here the reporting requirement now has been expanded. It says that expenditure incurred to provide any benefit or perquisite in whatever form. Either means whatever form, it may be cash or fine to a person whether or not carrying on a business or exercising in a profession, and acceptance of such benefits or perquisite by such person is in violation of any law or rule or regulation or guideline, as the case may be for the time being in force governing the conduct of such person. So basically here what it says that the requirement here is that if any benefit either in any form, cash or kind, as such benefit is provided to such persons which is violation of law, and governing of such person. Basically, if you see that this type of expenses, if it is paid, which is in violation of law, that is any type of benefit you give, any type of expenses you incur, which is not in a legal form. Legally, you are not supposed to incur such type of expenses, but you are incurred illegally. Now, in the business, you incur such type of expenses to generate some businesses, which you are not required to. So this type of expenses you have to report here. Now, how this reporting is practically possible in such profit and loss benefits in the tax audit report, and if such expenses are debited to the profit and loss account, because many businesses they do such type of expenses and they debit to the profit and loss account. Now, the tax auditor is required to report such expenses. How far it will be reported in the tax auditor will be required. Tax auditor is required to certify, but how far it will be justified to report there and will be a biggest challenge for the tax auditor to certify this that it has not been debited to the profit and loss account. If this is debited to the profit and loss account and if it is not certified by the tax auditor, then the report may go wrong. So but actually the report says that you have to certify it. So it's basically one thing has happened because in case of a pharmaceutical companies generally give some gifts to the doctors. That is, there are many cash laws which are there. That is gifts to the doctors or this type of actually not permitted by. So the one such example is there. So these type of expenses are not actually allowable to as an expenses. There are many case laws which are in favor, which are maybe against it. So this type of expenses, if they are debited to the profit and loss, the auditor is required to report such expenses. This is some example for that. Now, how it has to be reported or how it has to be certified and how much to what extent it will be a challenge, and it has to be basically the exercising of opinion will be based on the auditor's opinion. Then coming to the second last about the biggest challenging reporting is about the 43BH, which was introduced from 1st April 2023. That is any amount which is remaining unpaid. That is basically the 43BH is allowed based on the actual payment. The section allows the deduction on accrual basis, and if the amount is paid by the due date, then only it will be allowed on the furnishing of the return of income. So what it says that beyond the time limit, if the amount is paid, then it is disallowable. You have to go through this MSME Act, and when it says that MSME Act beyond the time limit specified section 15 of the MSME Act shall be allowed in the previous year in which the liability of this paid. So this is what the MSME Act says, but nothing in this provided. Section 43BA specifically says that it will be allowed in the year in which the payment has been made, irrespective of the date. So in the year, if it is paid, so if it is paid within the due date, it will be allowed. If it is paid after the due date, then in the year in which it is paid, it will be allowed. This is what the clause says, 43BH. So this has to be certified by the auditor and this will be reported in the tax audit report in clause number 22. Coming to the clause per se, this is just the trigger point. That is what auditor has to see that purchases is from the micro and small enterprise. Medium enterprises are exempted from this. So purchases have to see that purchases are from micro and small enterprise. Purchases should be of the goods which are manufactured by the supplier. Now, if a person is registered from if the creditor, the supplier is registered as a MSME, and if a supplier sells the goods which is not manufactured by him, then this will not be covered for disallowance. And on the date of the supply, the supplier should be registered as a MSME. So if on the date of the supply, if the supplier is not registered as a MSME, then disallowance will not apply. Due date should be, so if the credit terms has been agreed by them, if a supplier is registered as an MSME, or if there is a written agreement with them, then 45 days due date days will be applied. If there is no due date agreed, then as per the MSME Act, it will be 15 days. If the purchases are made during the year and the payment is cleared during the year, then there will be no disallowance. And if the payment is outstanding at the year end, then you have to verify the due date of the invoice and the date of payment for the allowance of the expenses. So coming to the gross purchase, basically this is just for the example purpose. Suppose if the invoice date is 25th of March and the due date of the payment, basically suppose if the due date is 25th of April as per the terms of agreement, which is agreed and it is written on the invoice. As per the MSME Act, for the first three example, that is due date as per the MSME terms is agreed 25th of March and due date is 25th of April, which is what is agreed. So as per the MSME Act also, the due date will be 25th of April. So if the actual date is 9th of payment is made on 9th of April, it will be allowed on in the assessment year 24-25 because it is paid within the due date. In the second example, if it is due date is 25th of April, but it is paid on 15th of May. Since it is paid after the due date, it will be disallowed in the assessment year 24-25. It will be allowed in the assessment year 25-26. In the third case, since it is paid in the year 25-26, it will be allowed in the assessment year 26-27 and disallowed in the year 24-25. What if this is just an example for the discussion purpose, because here the due date has been agreed, which is within the 45. Now, third and fourth and the fifth example, the due date is because 45 days, which is agreed. Similarly, if it is paid on 1st of May, it will be allowed in the assessment year 24-25. In the 2nd May, it is paid in 15th of May 24. Then it will be allowed in actually the example is 5th of June, it is paid on 15th of May, actually it should be 25, last case, there is a typing error in this, it should be 15th May 25, then it will be disallowed in 24-25. Is it clear? Another case, it is due date is not written anywhere, because due date is not written. So if the due date is not written, the days will be 15 days from the date of the agreement. From the as per the MSME Act, it will apply. The actual date payment, if it is paid on 9th of April, then allowed on assessment year 24-25, disallowed in the third is paid on 15th of May because due date was 10th of April. It is paid on 15th of May. So disallowed in the assessment year 24-25, it will be allowed in assessment year 25-26 on the same lines. So it basically says that it will be allowed when you make the payment after the due date. If you make in the payment within the due date, it will be allowed in the same year. Clear? So this is the checklist and the exact action point. So whenever you do the audit, identification of the MSME verification or registration has to be done and the nature of parties. So whatever, when you do the audit, you have to see that the MSME verification is being done. Check, classify the list, whether it is the MSME, and if corporate SSC is there, then MSME filing is being done on. Because if MSME filing is not done, what will happen? There will be huge penalties for not filing the MSME 1 form also. Now the MCA started taking the actions against for the non-filers. Any MSME filings for the outstanding bills, March 31, you will get the ready-made list for the MSME filings. Payments issued by the checks, whether checks are cleared or not, because generally we have the person have the they give the checks has to be cleared before the due date. If the checks are not cleared before the due date, then this will be disallowed. Interest on delayed payments to MSME, they are not allowable. Interest on delayed payment to the MSME are disallowed. Payment for capital goods also will be covered for that. According to me, payment of capital goods is also and reporting has to be done in the tax audit. This is mandatory. These are the checklists for the audit purposes. Now coming to the last point, this basically same forward, basically what was we had discussed earlier in the clause number 18. Similar way, when the new scheme of taxation is being opted, so any brought forward losses also, if any changes has to be done, same way the changes has to be done in carry forward losses or brought forward losses is there. In that, any changes is done, the same adjustment which is to be done in the is that has to be mentioned over here, and then brought forward losses, brought forward depreciation in the earlier, any assessment which has been completed. In that also, if any additional depreciation which was claimed, that has to be changed, then that also has to be reduced over there. So in remarks column, you mentioned it over there that these changes are required because of this. If the assessed depreciation is less than no appeal pending, then take the assessed income. If we filed assessment at 24, 21, 22, 24, 25 applicable. So whatever is regarding, you give that whatever you want to report, you report in the remarks column over there. The tax auditor should make the appropriate disclosure in the remarks column. So basically, these were the changes which were discussed about the tax audit, and we are having this income tax implementation guide, which is draft is already released, and the new implementation guide is about to come. Now coming to the ITR form, that is on 4th of January. The notification came, and by 31st of January, most of the forms were released. Utility were also released by 31st while before 31st of March. Exempted from e-filing, only one category of person is now exempted from filing, e-filing. That is a person who is a senior citizen, who should be less than a senior citizen, who is an individual of an age of 75 years or more. He should be a resident of individual, and he should be having a pension income and interest accrued from the same specified. So he should be receiving a pension income. He should be receiving an interest that should be from the specified one bank only, and from which he is receiving a pension, and the interest should deduct the tax and pay it to the government. Compute the income and deduct that, and then only he is exempted from e-filing. Otherwise, no. So basically, if you see, everybody is now covered from e-filing. This is only one category is remaining. So from e-filing. Which are the forms to be filed? I think everybody is aware there are 7 filing forms which has to be filed, what is excluded, what is included. Everybody is aware. So I'm not covering this. It's just for a reference purpose. Who wants to verify, you can just go through this. These are the 7 forms. There are no changes in the forms. Now for forms has been raised. E-verifications of returns, e-verification of returns to net banking, etc., is covered. Only one change which has come, that is through Aadhaar OTP. Now, as from assessment year 24-25, individuals and HUF were liable for audit can use this Aadhaar OTP for filing the tax audit reports, etc. Plan also can use this for e-verification of returns. This is the biggest change which has come from assessment year 24-25. And one thing you should remember that from 1st August 22, the time limit for e-verification of returns has been reduced to 30 days. Earlier it was 120 days, now 30 days. From the news, when the new website has been released, from that date it has come to 30 days. Within 30 days, you have to complete the e-verification of return. After 30 days, if you verify it, then it will be treated as, it will not be, it will be removed from the system, and the returns will be treated as invalid return. What will happen? The new changes has come, that is from 30 days. If ITR is duly verified within 30 days, your date of filing would be the date of uploading of the ITR. If ITR is not verified within 30 days, the date of filing will be considered your date of verification. But now one biggest change has come, that is circular number 2 of 2024, dated 31st of March 2024. It says that there are changes are there. That is, it says e-verification done on or after before 14th of July. This is just for example purpose. That is, suppose if you have filed your return on 15th of June, then your time limit is 30 days comes to 14th of July. So if you file your verify by 14th of July, your return will be treated as your filing date. ITR for ITR, your e-verification date will be your date of uploading of return. But suppose now 31st of July is there and you have uploaded your return on 15th of July. So your due date will be treated, your 30 days time limit will not be there. Your time limit is 31st of July. You have to complete your e-verification by 31st of July because you won't get that time limit of 30 days. You will have to verify it by 31st of July. So this is the biggest change. So if you verify after 31st of July, the return will be treated as belated returns and you will be liable for the penalty, that is late fee and the 234 Act, and the interest restriction on losses, etc., will also apply to this. So this thing has to be remembered. Then basically another related changes which has happened for the returns. So before filing the return of income, you have to ensure that your bank account is pre-validated. A bank account in which you want the refund, you have to see that the bank account is pre-validated on the income tax portal. So before filing, you see that the bank is pre-validated. Then earlier you had the option of selection of bank accounts in the credit you wanted the refund. So that option has been removed on the system. So bank account which is pre-validated on your IT portal, same bank account you have to mention in your ITR for refund. Refund will be credited to the pre-validated account of the taxpayer, which is there on the ITR. First bank account which is there, the refund will come to that bank account, same bank account should be there. If there are multiple bank accounts, then refund will be credited to one of the pre-validated accounts which is selected to be ITR. All bank accounts should be reported in the ITR and should be linked with the PAN. And refunds can be issued only in the account tab, that is savings account, current account, cash credit account, overdraft, and for non-resident assets in the non-resident ordinary resident account, not in the NRE account. Refund cannot be issued to the bank accounts which are closed, invalid, or under resident, under litigation, or in the blocked accounts. So this precaution should be taken. Then coming to the ITR filling forms, now basically many people have stopped using this ITR utilities. All the people are using softwares only. Now around 90% people have started using the software. So for them, this would not be much useful, but definitely those who are using ITR utilities. Coming to this ITR 3, 5, and 6, the selection of due dates of filing the returns is much more important because based on this, your other filings, there's basically a computation of interest, your processing, etc., will allowances of losses, deductions, etc., will depend on this. So any this returns filed under which section it is there, that has to be selected. Then due date of filing of that is to be selected. That is mandatory for all types of returns. That's ITR 3, 5, and 6 specifically, because therein the due date has to be selected by the ITR filing. That is mandatory. So this is the first change which is there. Then from assessment year 24-25, the new tax regime has been made mandatory for everybody. So those assessors who want to change or come out of this new regime and wants to opt for the old regime, they are required to file the form. That is form number 10 IA, which has been notified for changing, opting out of the scheme. And this is basically for business profession income. People who are having income from business or profession, it's basically ITR 3, ITR 5, ITR 3 and ITR 3 and ITR 4. ITR 3 is basically those who are having ITR business income. So under the Finance Act 23, and basically you see that even if they are filing the return late, they want to opt for the old scheme. They have to ensure that they should file this form on or before the due date. So if they don't file this form 10 IA before the due date, then they will have to go mandatorily with the new scheme. So even if you see the 31st July is the due date, as of now, unless and until if the extension comes or not, that is a separate issue. So if they don't file this form before the due date, then they will not be eligible to opt for the old scheme. So ensure that all the clients, if they send the request to them, so if they want to file, let them file the return late with the late fee, etc. So this has to be selected. If the 10IA is filed, then they will ask, the return will ask for the acknowledgement number. Acknowledgement number is mandatory. Send ITR 2, 3, and 6 basically it says that legal identifier number is mandatory. So legal identifier number is basically those assets remitting RTG money by way of RTGS in huge amounts, they are required to mandatorily get the legal identifier number mandated by the RBI. And such SSEs whose refund claim is more than rupees 50 crores, they are required to mention the legal identifier number in the ITR. And also it is required that they have to mention this legal identifier number in their profile data also. And they might be getting the intimations from the department by the mail if you are having the legal identifier number. So this is mandatory. This is basically for the non-individual, specifically for the non-individual. Basically for the non-individual SSCs is mandatory. Then another change about the furnishing the reasons for the tax audit and UDN number for acknowledgement for audit reports ITR 3 and 5 and 6. Basically, the tax audit, for what purpose the tax audit is being done, as clause 44AD, 44ADA, 44AB, etc., etc. So if this is the tax audit is done, then till last year, you just SSC had to require the tax, SSC had to require only to submit the acknowledgement number. This assessment here, they are required to give UDN number also. UDN number has been made mandatory. It is only, as of now, it is only for the tax audit purpose, not for the other audit forms. For other audit forms, it is only to give the acknowledgement number. So this is only required. Then about in ITR 3, 4, and 5, the additional columns have been added. That is for businesses, nature of businesses, you have to give the board, select the code. And in this code, you have to give what is the amount of cash business you have done. This is made mandatory. How much is your receipt in cash and how much is received other than cash. This is made mandatory. So even in business days, you have to give the breakup of the cash amount and the business code, which in this business code for specific business code, you have to give all the business code in which you are opting for a presumptive taxation. So this additional breakup you have to give it. So these extra columns has been added. Then about the MSME. It is now any amount which is disallowed for payments to the MSME. Now suppose the SSC has not paid to the MSME. And this MSME payment which has been made, not made to the MSME. So when the SSC pays to this MSME in the year of payment, that amount has to be allowed. So for that purpose in ITR 3, ITR 4 and ITR 5, additional line item has been added under clause and there is under part A OI, other income. So that amount has to be allowed in the year of payment. For that purpose, additional line item has been added in clause number 10A. You have to mention that amount in any sum in the nature of tax, duty or sales which is allowable, which was previously disallowed. So this is an additional item. Then about changes in the capital gains, that is ITR 2, 3, 5, and 6. I think I'm audible now, no?
Yes, sir, yes, sir, audible.
Okay. Then changes in the capital gains, basically till last year, what was there? That amount assets which you have sold. The assets you have sold and you have transferred the assets. So whatever the unutilized capital gains which was there, you have deposited that capital gains. So any unutilized capital gains which was during the year shown as deposited in the capital gains within the due date of that year. So any amount so that additional clarification until last year, what was the taxpayers were only required to give the provide details about the sum deposited in the capital gains. So this now any amount which has been withdrawn from the capital gains, it is required to be given that when this amount was deposited and how much has been withdrawn and where this amount has been used and what this amount has been done for the how much amount which has been not utilized. So that details has to be given. You see that how much information is also your income tax assessment is fully done now. So new asset required or constructed, previous year in which the asset was acquired or constructed, amount utilized, amount not utilized, etc., etc. All these details has to be given in the schedule for the capital assets. So basically, all your income tax assessment is being done in the ITR itself. So no need of assessment which is required to be done. Then about deduction in the chapter 6A about related to ATGGC, that is contribution to the political party or electoral trust. Now you require till last year how much you had given to the political party by way of donation, etc. Till that much was the requirement. Now this year it says that you have to do the breakdown that how much amount you are given and what amount you are given by which way you are given in cash, by other mode, and if I given by bank, then you give the check number details, IMPS, NEFT, RTGS, IFC of the bank which you have committed. So all details you have to give. How much amount? This is the additional information which has to be given to the donation. Then salaried employees, that is ESOPs which are being given. ESOPs are basically, if you see, the tax deferral was there for the startup companies. And for the startup companies, they had given the option that for this, any employee who are working with the startups, the tax was to be paid when they sell the assets. Means basically they sell these shares. So if any such startups, that deferral scheme has been opted. So in that case, now they require a new column has been added for the deductions. There's a new base. It requires that details of the startup has to be given. Whether that startup is eligible, they are registered with the DPIT or the PAN number has to be given, and DPIT registration number has to be given in that schedule. And the startups, which is about the deferral. So basically, it's just to verify whether the startup is really a registered startup or not. So that additional information is required. Then about ATA-CCH, a new there is any contribution which is made to Agnivir Corpus Fund. In that case, the form tax returns requires the new column has been added, that whatever amount which is contributed to the Agnivir Corpus that is eligible for deduction. So that information has to be given if any deduction is claimed. ATU, the deduction has been increased from 75,000 to 1,25,000. And for that purpose, one certificate that is has to be obtained from the registered medical practitioner, that is who is registered with a government hospital or not. So in that case, what is the name? And with that certificate has to be filed, submitted online with form number 10IA. That is made mandatory now. The date of filing of this form with acknowledgement number, that detail has to be mentioned in the ITR. So that has been added, this provision has been added. Then ATD, basically, if a person staying with that is a resident individual, this also deduction is increased from 75,000 to 1,25,000, basically on the dependent individual if any claim has been made. So where that dependent individual is a spouse, son, daughter, or any dependent really other than this, there is father, mother, brother, etc., or any other member of the HUF. Same on the same lines, this also has been deduction is available, but that is available under section 18ED. So in that case, the PAN number of that dependent has to be given. If the PAN number is not there, Aadhaar number has to be given. The PAN number, this form number 10I filed. The detail about that has to be given. So for that purpose, if this form is not filed, the deduction cannot be made, claimed in the ITR. So that form details has to be given. This is the changes which are made in the ITR. Then about dividend, which is received by dividend income from International Financial Service Center, section 80LA is there, which says that the tax is to be charged at 10% instead of 20%. And for that purpose, additional column that dividend should be reported under that normal dividend. It is reported basically under special line item is so that while processing, it does not treat the tax as a normal dividend. It will be calculated, tax will be computed at a concessional
And again, I think there's some problem. Oh, yeah, yes.
I think it is got disconnected.
No. He's there, sir. He's there. Avinash, sir, you are muted. Yeah. Sir, you are on mute.
My screen is shared now?
Yeah. Your screen is shared. No.
Okay.
Screen is not shared, sir. You're on.
1 minute. There's some problem. There's that. Yes. 1 minute. That's all.
ಇಂಟರ್ನೆಟ್ ಅಲ್ಲಿ ಅಲ್ಲಿ ಸ್ಕೀಮ್ ಪದವಿ
Screen share. No, it's done. Is there? Screen has come? Screen has come, no? Screen has come, no?
No, sir.
No.
Now
Yeah,
it has come.
Just come.
Yeah. Okay, fine. So bonus payment on LIC policies, basically the bonus on some of the policies has become. So when you do this, you have to see that any TDS which has been deducted on the LIC policies. So if any TDS goes, some of the policies has now become taxable. So any reporting on these policies, it become taxable. You have to ensure that see, for this purpose all the line items are there. So any sum received including the allotment of by way of a bonus at any time during the previous and the life insurance, for this has to be reported under this column under the OS, that is the income from other sources. So for this purpose, basically whatever you see that any income which is taxable under that source, you have to report in that specific column. Then if you don't report it in that specific column, you at the time of processing the returns, there is a chances that you will not be getting the concessional tax rate, or you will not be getting the proper tax computation from the department. So report the income correctly wherever it is required to report. Then about the unit holder trust, there is basically reporting of sum received by unit holder from a business trust. Now ITR 2, ITR 3, ITR 5, this is basically 56 to 12 was inserted in Finance Act 2023. It says that to dual taxation scheme, non-taxation of certain unit, these are distributed by the business trust to its unit holders in case of redemption of units. Now what it says that redemption of units are there. When the redemption of units are there, certain amounts are based by cost of acquisition or any expenses which are there. These are allowed as a deduction. Only the net amount which is there, which is taxable, has to be reported. So whatever which is specifically some received by a unit holder from a trust during the previous year, which is taxable under section 56 to 12, that has to be reported here. So here net amount which is taxable, that has to be reported. So any of the we will be getting the business trust. Now what is the people have started investing, investment activities now become the business main activity of the people. Slowly and gradually people have when our Indian economy is now booming, people have given the money for investment purpose and these people are getting lot of money from by way of investments, income by way of investment. The business trust is one of the area where the people have given the money to such persons, and where they invest the money and they get the funds. So there only the taxable part has to be reported, not the entire amount. Then ITR 2 was mandatory to disclose all the bank accounts which are been operative, and only the dormant account which has not been operated in the last 3 years, they should not be reported. And ensure that all the ITR bank account which are operated should be validated on the IT portal. Validated in the sense they should be registered with the PAN and that should be validated. Even though you don't want the refund on that account, but it should be validated. Then schedule ATLA, seeking the details of the offshore banking unit of the IFSC. Now ATLA, what it says is that deduction in respect of certain incomes of a offshore bank units and the IFSC. IFSC basically this is applicable to a scheduled bank, a foreign bank, or a unit of IFSC which is eligible to claim a deduction under these provisions. Now, in case of a bank, 100% of deductions is deductible for the 10 consecutive assessment years. And in case of a unit which are located in the IFSC, 100% of the income is deductible for the 10 consecutive assessment years of the 15 assessment years. 15 years. Now, if this exemption is to be claimed, then this additional information is required to be given in the ITR. The new schedule has been added. So in such cases, is that if your SSA falls within this criteria, then you have to give this additional information about the type of entity, type of income, etc. Then pertaining to already discussed when we were discussing about the tax audit. So tax audit at that time, the block of assets wherein any changes are required to be done. So if due to the adoption of the new scheme, so if any changes are to be required to be done in the written down value, so this on the similar lines, the same schedule which was there in the tax audit similar way, the same schedule has been added over to the. So in case the tax audit is required to be done, the tax auditor will have to certify it. And in case the tax audit is not to be done, then this schedule has to be provided if whether new scheme has been adopted. Then about startups. If ATISC seeks the due eligible startups, is ITR 5 and ITR 6. Deductions of ITSC is available for the eligible startups for the 3 consecutive assessment years out of the 10 years. So if any startup is there, then they are given an options, that is which 3 years you want to claim the exemptions. And for that purpose, you have to give the date of incorporation, nature of business, certificate number, which is obtained from the inter-ministry board, first assessment year in which the details was claimed, and amount of deduction which is claimed. Previous ITR forms only required the deduction about these details about the MSME recognition, but now new form requires all these details which is required to be filled up. So this is the additional information which is required to be filled up in the new ITR, that is ITR 5 and ITR 6 specifically in this ITR. ITR 5 and ITR 6 requires section 115 TD, which is related to accrued income. This requires the computation of the fair market value of the total assets and reduced by the total value for the accrued income and the details of the challenge for deposit of the such income. Then 115BA, that is we already discussed when we were filing, discussing about the cooperative manufacturing society, that is about the details about the 10 IFA form which is required to be filed. This acknowledgement number has to be given in the ITR 5, just like the form number which is required to be given, acknowledgement required if you opt out of the scheme. Here which you when you opt into the scheme, you have to give the acknowledgement number. Then this basically covers all the changes which are to be which are there in the ITR for the assessment year 24-25. This is now our precautions. What you have to take is, while filing the ITR, people will come to you, assessing client will come to you that this, yes. First thing you have to see that before filing the return, you have to see that your master data is updated or not. First and the foremost thing, your profile and master data should be updated before filing the returns. And if there are any changes, you have to see that you correct the master data by filing form number 49A, update the address, PAN address, the address, telephone number, etc. by filing form number 49A and correct it. Second things you have to do is you have to validate all your bank accounts, and with bank accounts which are closed and which are not in operational, you have to remove it from the bank account. Now, one question that I have already given the bank account which is there, which is the old bank account, and my refund has to be received in that bank account. No. Now this thing is that even if your bank account is closed, your account is come in the new bank account which is there. So that thing has been removed from the system. So if the bank account is closed, definitely removed. If the bank account is not valid, the new account which is there on the system, the refund will come on the new bank account only. That you have to close your bank account, and you have to see that the cooperative banks which are there, the small cooperative banks are there which are not linked with the ITD portal. You will not be getting the refund in the old new bank account. You have to ensure that you report the deductions which are properly available. Don't report any such deductions which are not available, and don't report any false deductions. Compute the income correctly, comparing with the same with the AIS, TIS, and 26IS, because now all the information is readily available on the AIS, TIS, and 26IS. Any information which is there on the AIS, TIS which is not matching, please do that. You update this, you provide a feedback on the AIS, TIS, so that that income does not add up at the time of, you don't get the notice of not reporting the details correctly. You have to give the feedback on the AIS, TIS. Claim the carry forward losses as per the intimation. So if once you have filed the returns, the intimation which comes to you, ensure that that intimation is correct, and even if there is no refund, if any carry forward losses is there, you just have to verify the intimations which comes properly. File the returns properly and pay the taxes which are legally due, and encourage your clients to pay the taxes correctly and file the returns properly. Any defaults which are noticed as default, compliance is required. Comply with the same. Otherwise, the time limit of 15 days which is given to comply with the notice, after 15 days, the system will generate the defaults and the systems may take out the notice from them. Complete the verification within the time. So any default notice also comes, any verification is pending, we have to complete the e-verification on time. Any intimations received from the CPC should be verified and reply should be given. So if any mistakes are there, corrections statements, 154 replies, everything should be filed. So this will complete your full circle. That full circle has to be completed. Clients comes to you, says, as per the income, my client income is so much, but your 26 AS will show that this much is their income. But TIS always has all the details that this is your income. So this basically income difference is going to remain. But you have to see that exactly what your income is. You have to guide your client that this is your correct income, and correct income should be reported. Some useful tips basically definitely are there, because generally returns are prepared by the staff and uploaded. Now you think the returns system have become so much updated that now staff can file the returns. There is no need of chartered accountants, no need of boss. Without boss intervention, everything can be done, right? But see that even ultimately when the returns are filed, the returns filing, ultimately the responsibility when it comes for faceless assessments, when it comes for the department, definitely responsibility is there of the bosses. Whenever the details, because verifications comes, backups should be available. When you deal with the technology, the time, and again, you should not depend with the technology sufficiently, because you never know when the systems crashes, whenever things happens, some hard backup should be there. Hard copy should be available, because whenever you deal with the technology, whenever the technology will fail, you never know. Hard copy should be always be available. Ensure that sufficient backup is available. Sufficient details are available with them. All the workings, you may be having the workings, n number of workings may be there. So once your return has been filed, ensure that your unwanted workings are removed, and the final working which is there, that is only available with you. So that whenever you want it, the details you have uploaded it, whatever the final workings are there, that is available to you for filing. Definitely, private softwares are very useful, very helpful. 90% of the returns are being filed by private software. But then also, please don't rely blindly on the private software. Some things may be wrong, some things may, because generally everything may not be correct. Validations utilities provided by the income tax department are very control oriented. Final computation needs to be verified before filing, before uploading. Just please have a close watch, because generally it is seen that what are the software reports which are generated and what is uploaded may not match. So once the returns are uploaded, whatever the reports you get it, whatever the final acknowledgement, you get figures, it should match it properly. You run that one utility with JSON file which is generated. You can run it on the income tax department's utility also and see that whatever the computation which is generated on the income tax utility is matching with the software or not. Just this is for a cross check, because as an auditor, it is our duty that we can just cross check and cross verify it, because income tax department utility are much more reliable. Now we have pre-filled utilities which is available, though they are not much final to that extent, but definitely they are much more reliable. So you can just whatever generation this generated pre-filled generated JSON which is there from the private software, you can just run on the department's utility and you can just verify it before filing it, at least so that you can get mental satisfaction that whatever is filed from the software is fine. And just thing is that don't try to override the utilities, because software, whatever you do in it, you can easily modifiable. There are certain software experts, they can modify the utilities, they can reduce the tax burden, they can reduce the tax liabilities also by doing changes in the software utilities. But please don't do it, because anything which you do it on the software under the income tax, under the IT Act. IT Act means the Information Technology Act. Anything overriding the utilities or any playing with the is penalty is liable to for a penalty or fine under the Information Technology Act. And doing any forgery means doing any act under the IT Act is much more dangerous than Income Tax Act. So please don't do it, and do not, if such any of your clients also try to do this, please avoid such type of clients, because I do not always encourage this type of things. So please see that such type of clients should not be encouraged. Definitely, just issues which we face, clients department is also facing such issues. Basically, there are willful defaulters. There is persons who are filing the returns in between. They stop filing. Revenue collection, definitely they have a challenge. Responses to the notices are being changed. People don't respond to the notices. Once the returns are filed, they stop coming it. They don't respond to the notices. And non-filers, basically income, they have it, but they don't come and file the returns. When the department takes strict action, that time only they come and file it. Periodical review of exemption, deductions in the budget, etc. They keep on doing it. And they have started taking the prosecutions launched against the willful evaders of the taxes. We have the softwares as such more, they have the department's internal software developed in such a way that they take care of everything and the informations are available with them. But definitely the target is that more and more filers come to file the returns. Even social and natural calamities are there. This is one of the biggest challenge, because in June, July, August, these natural calamities are such that is also one of the reasons where the returns filing is dependent. Because and now again the websites have also started giving a problem, because last 2 years we have seen that website was not giving such problem. Now other OTP etc. is becoming also issues which is going. Government has started taking action against the stringent non-filers, because ATAC2 is there, introduced to the extent that this disallowance introduced that if you don't file the returns within the time, then section 80H to section R, the deduction will not be allowed if you don't file the returns within the time. There is time allowed in the section 139(1). Then about section 277, 276(c) says that imprisonment up to 2 years if a person doesn't file this return, the taxes are heavy and companies are excluded. That is, they are not given any kind of exemptions. Only the benefit is that the provision says that up to 3,000 rupees exemption base, up to 3,000 rupees only this provision will this benefit is there, and but the government is not taking action against such companies are exempted from this thing. The target is that to prevent the abuse of such exemptions provided. So though the income tax department has not taken such stringent action, only in 1 or 2 cases they have taken such stringent action just to avoid this Benami properties holding by the companies in such. Call center numbers, they say those who are facing any problems, there are dedicated call center numbers for help desk centers, e-filing, etc. You can just contact them. Dedicated mail IDs are there. Any problem related to 3CD filings, any file problem related to ITR help desk, e-payment of taxes, any other issues, these are the email IDs. You can contact to them. Within 25 hours, your issues will be resolved. Definitely, when you contact your client, definitely he'll say, why, what is the hurry? Till now time is there. But what to do? कर देंगे आराम से, अभी तो घाई क्या है. But you see that whatever the TDS you deduct, unless and until you give the full refund, clients are never satisfied because they consider TDS as a saving scheme, and whatever the TDS is deposited, that has to come full refund. If a TDS CA doesn't give full refund, then it is considered as a bad CA. And TDS on audit fees is looking handsome when you get the fees which is less than a stipend. 31st July is the due date. And you see, when you ask for the fees, basically specifically from a friend, he said, "यार यार fees देने का है क्या? Return file का fees भी तो होता है कि नहीं, क्या होता है?" But finally, I've tried my level best to cover everything which is possible, but I'm extremely sorry for the two things which has happened because of the electricity power in our office. It has not happened till now, but today it has happened. But you cannot do today's job with the estimated methods with the tomorrow's business. But this is a challenge. A mistake should always be taken as a mistake and not my mistake or his mistake at different time. If suppose a mistake has happened, you can always file the return. In a mistake, it is happened by return, then you can file a rectification, you can revise your return. But in life, it is very difficult to rectify a mistake. If you don't like something, you can definitely change it. But the way you think, you have to change your way of working. Definitely, the future is this, and you have to be with it. Any doubts, any questions, you can definitely take up, because filing the return, after filing, you can bring this type of happiness. Thank you very much. Thank you very much, everybody. This is our final target, that we have to reach this final target after all.
Thank you, sir. Thank you, Avinash sir. Thank you so much. Sir, you can, yeah. Sir, thank you. Really, you explained elaborately the changes. So generally, it looks very simple. In general talk, people say that not many changes, but when we see your presentation, there are a lot of changes, lot of things that we need to observe. Then only we can file accurate returns. According to me, 43BH is going to be big bouncer to the auditors, sir. Many clients don't know about this provision, that in the month of March only they woke up and they try to, some of the clients could do the complaints, but I'm sure for the first year, 43BH is going to be a big challenge for the auditors to face. So
yes,
thank you very much.
First thing is, in 43BH, you will have a challenge. Reporting also will be a challenge, and to deal with the clients also will be a big challenge. This is the biggest challenge, and now let us see, because this finance minister has told that they will be reviewing it, in the budget, and see whether they are removing it or no. That is also to be seen, because till on 22nd of July, this what they're coming up with, that is to be seen.
Correct. If it is removed, fine. We'll have some relaxing time.
Yes, definitely.
Sir, thank you very much. And viewers, we have with us P. Samamurthy Garu, who is going to handle the question answer session. You can come up with either chat box, or you can raise your hand. You can talk to the speaker directly. Whatever the option you want, you can use. Now over to Samamurthy sir with a few words and as a response to the speaker meet.
Thank you, Chandrasekhar, for giving me an opportunity. Thank you, sir, for an excellent and precise presentation, which is very handy. Kindly share the PPT, sir. It will be just like a ready reference for us, for our works. And your quotations are all really...
I have already forwarded it.
Okay. We will share. Sir, in the meantime, the other participants ask question. There is only one question in the chat box, sir. Normally, people sell agricultural land which is exempt, that is, which is not a capital asset. And they receive exorbitant amounts of 50 lakhs, 1 crore, 5 crores, 10 crores. And as it is exempt, they will be confused where to show. So that is the question.
Exempt income is there is a clause in the ITR itself where it is says there for exempt income. It is already there is there in the exempt income clause.
Why he is asking the question is, if I show some 3 crores or 5 crores as exempt income, immediately scrutiny will come.
It has to, because it will definitely it will come, because even if you see any registration of property is there, it is definitely bound to come. If you don't file the return also, it is going to come.
So that's what his question is, where to show. It should be shown in exempt income.
Yes, definitely, and definitely
Total consideration is to be shown, sir, or only profit is to be shown?
No, total consideration. Income means basically it is a income means you have to show the income only, what, which is tax, which is
He has
income. Because
purchased
sales
for
making-
5 lakhs, sir. He has purchased for 5 lakhs. Now he is selling for 5 crores. So इंडेक्स करके नेट इनकम बताना, नहीं तो 5 करोड़ बताना बोल के पूछ. He is asking.
Index करके बताना है. It has to be shown in indexation. Basically, it is see what happens. It is basically what he has got is fully. It is whatever amount has come is fully exempt only. If he shows spike, because it's come fully, it has to show fully only because it's exempt only, full participation, full only.
Server is పోతుందా?
So any participant having any question, I request whoever is not asking question to mute themselves.
MSME test has to be done for each payment exceeds 45 days during the financial year only at the time of filing of the audit. And basically, whatever MSME test has to be done only whatever the payment which is outstanding at the end in the balance sheet, not balance sheet date. Balance sheet, not at the during the whatever payment has been made during the year and done is squared off is done, is already gone. Nothing has to be done for that. And whatever payments, even if whatever the payments is now, suppose if as on 31st of March I am doing the audit, 31st of March to 2024 I am whatever audit I am doing, if any payment which is outstanding, which is pertaining to prior to
మెసేజ్ చేస్తున్నాడు మమ్మీ ఉన్నా కదా
యూజ్ మనీ అని ఒక ఆమెని మ్యూట్ చేయండి సార్. ఆమెకు రిక్వెస్ట్ పెట్టినా చేయట్లేదు. రిక్వెస్ట్ చేశాను. యూజ్ మనీ అని వచ్చిందని ఆవిడ. ఆమె కొంచెం మ్యూట్ చేయండి. ఎవరి కంట్రోల్?
Hitesh, you can do.
Hitesh, you just mute her, na?
Sir, both of you can unmute yourself.
Sir, आप unmute कर ले sir. Avinash sir, please unmute yourself.
I'm audible now?
Yeah.
So 31st of March, if anything is outstanding, I have to see that whether that pertains to the financial year 23-24. So if anything is pertaining to financial year 23-24, that only I have to consider, and in that also I have to see that whether that pertains to that party is small and micro, small or micro. If it is small and micro, then I have to see whether that party has supplied me the goods which is manufactured by him. Then only it will come, and that also then I have to see whether that is outstanding for more than 40. Then I have to see whether that party has an agreement with me that is 45 days or not. If it is 45 days, then I have paid with him within 45 days. Then if it is not if I don't have agreement with him, then I have to see 15 days. And if I have made the payment within 15 days, then it is out of the question. Otherwise, no. Clear?
Your presentation contains a detailed pictorial depiction of the allowability, sir.
Yes.
Once any person faces problem, let him check with that chart. Automatically, the solution will come.
And even our implementation guide, which is coming up with the institute, also has a very detailed presentation with this. You can just refer to the new implementation guide. I think the draft implementation guide is already released. New guide should come immediately.
Yes.
Sir, Avinash sir, one observation, it looks very impracticable. For example, if I'm auditing the books of 23-24, okay, till 31st March 24, I can verify the transaction. But in this case, if we have to verify the transactions of May and June also, I think it is looking beyond reasonable.
We have a guidance on the events occurring after balance sheet date.
That's what.
Accounting standard is the events occurring after balance sheet date.
Sir, this one query has come, sir. If anyone has dividend income, we need to show in both scheduled other sources and business profits for this year 23-24.
You have to show it as an income from other sources only. How it is come as a business profit? I think there is this is going on the WhatsApp group that first you show it as a business profit and then you reduce it and then you show it over here. That is some problem in the utility which is going on. There's some issue which is going on. Then is I think that correction should come within a day or two. That you should show it as an income from other sources, not as a business profit.
One Shiva is asking, sir, how about service under 43BH?
Yes, yes. Services is also covered. Services are also covered.
Yes.
Manufacturing and service both are covered. If the party is registered as a service provider, you have to see the certificate. In certificate, what it is written. See, MSME registration is for manufacturers and service provider both. 45 days we have to see means 45 days. First of all, you have to see whether they have the agreement or it is written in the invoice. If it is not written in the invoice or you don't have the agreement, then 15 days will prevail.
While filing ITR 3, error has come to show on ITR utility, online utility. Probably when she was filling up, that error crept in, it seems. The website is behaving in a different manner at different times, sir. Different messages are coming. So nothing to worry. Once it settles down, your problem will be solved. Because as sir already told, it is other sources only.
It has to be in the other sources. It cannot be as a business income. $45 days we have to see from the end of the year.
One Mr. Admin is having doubt. Service under so and so 45 years when we have to see from the end of year when there is agreement.
Yes. See from the date of basically what is you have to see first of all as on 31st of March you see what is outstanding, and if it is outstanding on the 31st of March you see what is outstanding, then you take out the details. So then at that time you have to see the invoice date. So from that invoice date you have to calculate the 45 days. In that 45 days you have to make the party has to be made the payment. So if that 45 days payment has not been made, then it will trigger for disallowance.
And one more question is the trader is a purely trader, but he has taken manufacturing certificate. In such case, what to do?
No, the trader is even if he has taken MSME certificate, it will not be disallowed.
That's what. Because what I am advising, sir, a trader may have taken manufacturing certificate, but you know the type of transaction and type of person, whether it's manufacturer or trader. Simply he has taken manufacturing MSME, he will not be covered. Unless he manufactures something and gives to you, simply registration will not.
Yes, and even if a person has taken MSME registration, and if he is a medium, he falls under the medium category, even if he is not covered.
Yes. So in ITR 3, while filing section 54, it is asking date of deposit.
Date of, yes.
If it is deposit, kept in deposit, definitely it will ask date of deposit, sir. If it is expended, it is not asking date. If it is not spent and kept as deposit, definitely it will ask date of deposit. Because it will give track of 2 years and 3 years for purchase or construction, no, sir. Automatically your income will be added if you don't spend it. So that's why the date of deposit compulsorily one has to.
Date of deposit, date of investment in new property. That has to be understood.
Yes. 6 months ago. So please explain difference between 1023 FD and 56-12, it seems.
Today we are discussing about this filing of return. This is not this legal thing.
Because that's why I restricted, sir. I have a CPC question to you, but as it is outside the ambit, I have stopped myself. If Because NV sir is telling for invested in new properties. But if you invest directly, show it the date of don't tell anything. Date of this thing you can put. There is no question of date of deposit or anything. If you purely take certificate as service and trader. If any person trader takes for service as well as trading as manufacturer, it is applicable to only service lot.
So if that service, if it is for the services, that the invoice is outstanding for services, then that it will be covered for the service. But for the trading goods, it will not be covered.
So, from our end it's over and other people are also waiting others to ask questions. One person's question is 100% answered.
I think no one is.
No, because of website, nobody has touched the returns. They are kept pending for Mankali Jatra, I think. At one time, Jana Jatra and Mankali Jatra will be done.
But at right time, the session is initiated, and I'm sure this presentation, sir, PPT will be sharing to all the tax bar members through mail, so to the respective mails, and also we'll try to share in the WhatsApp groups.
Back to
Kamamurthy, due date is not near, that's 1 month, so people will not come so soon.
Oh,
so we take note presence of C. Venkatram Garu and Srinivasan Kalahasti Garu in this meeting.
Yes, sir. And also treasurer also there. Ashish Joshi is present. Treasurer tax bar.
So over to you, Chandrasekhar.
Yeah. So thank you, Sammoti sir. I expected some joke from you. Okay. Thank you, sir. Request President for the closing remarks.
So I think we have come to the end of the program. So I again thank the speaker, Shri Avinash Rawani, for the insightful discussion which he has given today. I think we all should take it forward from here and see returns, etc. It will always have some more other issues. I generally, at least because I follow GST, at least what I feel is that no return can be 100% accurate today. But still, we should always try to complete it to the extent best of it possible. And we have to serve our clients for a valuable remuneration, I should say. Because the kind of efforts which we are putting in the work involved and undervaluing the work is not the right perspective today. So I always support proper valuation of your work, and you should charge your client in such a way that the hard work which we are doing also indirectly, like through tax bar, this also should get remunerated in your pockets at least, so that you can contribute more to our organization. So we also have an indirect linkage with your earnings. So I look forward for more such sessions, more such programs. Avinash sir, again I thank you for the first of all, I should thank you for the concurrence which you have given. Then on time, see, glitches happens everywhere. So still we had a good discussion, and I would like to bring to notice that members who have attended the program are not only from Hyderabad, they are beyond Hyderabad actually. Even there are members from Karnataka who have attended this program. So I think we have tried our best possible. We'll do more such programs in future as well, not only webinars, but also physical programs. So I request all of you to cooperate and regularly participate in all the programs. I, being a very young member of the organization, I always try to put the best efforts possible. So I think it should be a collective effort along with the entire team. So again, I thank all of you for attending the program. Have a nice day. Enjoy tax filings. Thank you.
Thank you very much.
Thank you, President, for your good words. Members, as President said, yes, really we're planning a good number of programs physically and virtually. And some programs as suggested by our senior GC members like presentation skills. So that also we're trying. So watch the mails of try to observe the mails and the WhatsApp groups. Whenever there is possibility, try to join and enrich yourself. So now I just propose vote of thanks. Thank you very much, Avinash. So in spite of the technical glitches, you really made the session very good and elaborate. I'm sure your PPT is detailed PPT that we have. We'll be sharing, and you have given detailed explanation within a span of 1.5 hours. You could cover the entire changes. Thank you very much for your valuable time, and hope we'll see more and more programs from you. Said the AP and Telangana tax bar is looking towards more and more programs from you.
Thank you very much.
And thank you all the participants for making this program a grand success. I think around 94 participants participated in Zoom, and around 20-25 members in the YouTube. So around 120 members could use this opportunity. And all the seniors, Venkatram sir and Samamurthy sir, Amrut sir, and I'm seeing RK sir. I don't know whether he is there or not. Ramdevji.
No, sir, he is not keeping well, sir. He was hospitalized 2 days back. So he's
And,
not available.
welcome, sir. Bujja Madhusudan, immediate past president. So with all your good wishes, we are doing good. So all the members, thank you very much, and thank you GC members for your valuable time. So just hold on. We'll end the meeting in a short while. Request the GC members to stay back. Thank you all. Thank you all.
Thank you.